I ran those numbers out of Germany by Michael Koetter, a professor of banking and finance at the Frankfurt School of Finance and Management. I pointed out to the professor that it's basically flat growth. He made the case that it's at least a good start.
I think you're perfectly right in stating that growth is flat and the numbers don't pose a big surprise to markets. However, these are numbers which have to be put into context of quite dire times for the Eurozone as a whole, and also big challenges that Germany is facing for sure. In that sense, I think flat growth is good news.
You know, Angela Merkel there had a lot of talk with officials in the past year about austerity, more austerity, and getting fiscal things in order. And noticeably, that talk has kind of quieted down a lot. What do you make out of that?
I think that the talk about austerity is a little bit less virulent and less obvious in the media, but I do not believe that the general stance of German policymakers has changed an inch. In fact, I do believe, and it is embedded in law by now, that there's a firm commitment by the German government for sure to balance the budget in the near future, or at least in the foreseeable future. And there's strong efforts at the European level that German politicians are working towards fiscal consolidation and austerity in other Eurozone countries that are under stress.
Let's talk about Europe as a whole. A year ago, we were talking whether or not countries like Greece would even stay in the Eurozone. Today, we're talking about markets that are hitting basically new highs. I mean, there's a lot more confidence, at least outside of Europe. And the question is, does Europe still matter to global growth? And if so, why?
I think to answer your first hint, not really question, about burgeoning stock market, for example, you see the DAX, for instance, the German stock market index just hit all-time highs. I think we need to be very careful here to distinguish between confidence and lack of alternatives. I think that at the moment we have quite a loose monetary policy and there's ample liquidity in the market without clear investment alternatives to stock markets. So I'm a bit more cautious about how to interpret exactly those burgeoning stock markets. That also goes for the U.S., by the way.
By the way, I want to follow up with that. Are you saying, I mean, I'm reading between the lines here, you're basically saying that because there's no alternative, the money's pouring into stocks, which essentially is a nice way of saying another bubble?
Well, I wish I had a crystal ball and knew the future, because then I probably would be a rich man tomorrow. And I'm saying that if you look at investors' possibilities these days, there certainly is quite an ample supply of money around without very clear low-risk projects around. You see yields are low. I mean, we are in a historically low interest rate environment. Fixed income, especially fixed sovereign income, is of course subject to unknown uncertainties these days. So I think it is not too far-fetched to conclude from that it seems almost like a logical development that we see that stock markets are receiving a lot of attention these days.
So I mean, back to the original question of, should the world count on Europe on getting back on track for global growth?
I think this is a must. Due to the sheer size of the European economy to start with, I think it would be a fatal error to neglect Europe and say, dismiss this as a region that is not able or not willing to reform and restructure.
That was Michael Koetter, professor at the Frankfurt School of Finance and Management.